Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, July 27th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the ES in the daily time frame. One thing you'll notice here is that price remains in an uptrending market at the moment. It remains in an uptrending market. The bullish PIMA trigger zone has continued to trend higher, and you'll also see that right here this is resistance here, where again we're right at the zone where if this were to fail based off this bearish outside day here and closing back below this pivot, if this were to fail, it would be a failure to get or back above the 3230, or a failure to reestablish acceptance back above the 3231 quarter level. So back above this zone, it could get as high as that area, but if it starts to fail there, that might be an indication we're headed downward, perhaps to take out the previous week's low. While this is a buy the dip opportunity right in the PIMA trigger zone, again, the fact that we are bumping up against the key range resistance there, that's an area just to be a little bit more cautious. Once we can clear that zone, it opens the door to more strength into 3300. Failure, though, again, the fact that we haven't taken out the previous week's low here and instead went into the pivot range for the week when it's a higher value with a change of bias here, right now this still has the potential to fail. So keeping an eye right here on 3225, 3230. If it can clear that zone, it opens up more strength the rest of the week. Now here's one thing to keep an eye on, is that Wednesday is the FOMC statement and also the Fed interest rate decision. So this Wednesday we're going to get ourselves another FOMC key level. The last time we got one here was June 10th, and you can see how it has continued to hang around that level, 31.96.5. What you tend to see is a one move away from that level, either up or down. Once you get that initial move and find rejection, you tend to come right back to that level at some point. If you get beyond it here, it becomes support, and as soon as it fails to hold it, then it perhaps rotates lower to a prior FOMC key level. So you can see how that's played off quite nicely off that level. We're going to continue to watch that level or wait for that level here Wednesday when we get it. And so again, we might see a little bit of range bound action here heading into that event, so Tuesday into Wednesday, but for now we could see a little bit of action here at least early in the week to set an intra week key range. So we'll continue to watch these key levels and the event here Wednesday. Alright, let's take a look now at the NQ. Switching over to the NQ, this is up about 0.8% right now. It has held the previous lows. That was important here. So you can see this previous low right there. Price took it out last week and rejected back above. We got ourselves a pretty intense sell-off here from those highs to this low. It's a 5-day pullback. 1, 2, 3, 4. Actually a 4-day pullback. Very, very solid. And now we're holding off this low right now. A little bit of a rounded bottom developing in the 60-minute time frame at the moment. But again, if price can snap back to the previous week's midpoint, that would be a nice key range that we can then use moving forward. We also have this larger key range as well, but this is a nice impulse move that could give us this pink line here, which is the midpoint of last week's range. But a failure to get beyond that level could suggest a little bit of a turnaround. As of right now, we have 10,300 up to 11,060, and that's your trading range. And the idea is that we may see a move right back up and perhaps come back down until we see expansion one way or another. A failure to hold 10,300 on a daily closing basis could open this thing up as deep as the 9,400 level, this pivot low here. So again, very nice solid support zone right in here, 10,300, and again 10,400, but a little bit more upside toward that 680 zone, which is the previous week's midpoint. That level right there is a target, but if it can't get beyond that zone, we may be stuck heading into the FOMC event. Alright, let's take a look now at crude oil. So you'll see here with crude oil, we have a very nice range that has developed, a narrow range over the last 4 and now 5 sessions. We can bring up a 5-day developing, or we can bring up a 4-day. So here's a 5-day developing here. One more. There we go. And right here you'll see again we're measuring this 5-day range right here. And at the moment it's not completely compressed because we had a ton of compression leading into it. but it's definitely a solid range, right? We're at 73% of ADR. It's still narrow compared to historical 5-day ranges, so it's still narrow, even though it's not quantifying as such because of all of the compression we've seen lately. But overall, again, we are building out for a potential move ahead. And one key level here that stands out is that previous month's high here, where price really hasn't been able to find much acceptance above it. And we've seen a pretty tight range bouncing off of 40 and even 41s here recently. So again, that's kind of the range at the moment. Pullbacks to be defended. The Pima trigger zone continues to be defended in here, and all prices at or below the 8-period average, again continuing to be defended. As soon as those levels are taken out, that could lead to one big flush event where we come back to, say, the FOMC key level 39.30 from the June 10th meeting. So again, that's something that could be seen if we get like one big stop run day. As of right now, still sideways to up, but again, keeping an eye on this narrow range as it develops, because it could give us the next potential breakout opportunity. Lastly, taking a look at gold futures. Gold has had a significant rally here, a big time breakout. We talked about this before, how this narrow range right here over a 10-bar basis here suggested expansion. You can see it was compressed on a 5-day, and look at the expansion that came. Big time movement. We've talked about 1957 as our upside target for quite a while, and we also talked about the 1831 upside target for quite a while. And you can see it all came back from this impulse range that developed early in March. We got a lot of compression here, and eventually we got that breakout. When we talked about that right there, we mentioned as long as it holds above 1750 here to 1760, it opens up 1831 and 1957, and now very, very close here to getting the 1957s. At this pace, we're going to be there in a day, right? By tomorrow, we will have hit the 1957 70s. So again, based off of one impulse move several months ago, we've had great accuracy on calling out these targets. And again, this one still has more upside in 1957. Now that it's done that move, it could theoretically drop as deep as 1831 and develop a range between 1831 and 1957 to create new market structure. So right now, big time upside push, perhaps one more leg higher, one more leg into that 1957.70. But overall, this thing has been very, very bullish, and at some point here, after completing that move, it wouldn't surprise me to get some sort of pullback ahead. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.